David, I can't hear you.
Yeah, I was muted. I didn't get unmuted. We're going to do all that one more time.
Okay, I didn't know if it was just me. I was looking on my side
Nope.
desperately, like, what am I doing wrong here?
No, that's okay. We'll start it
Okay.
one more time. Guys, if you're still using business, nope, one more time. What the fuck today? We're live too. Guys, if you're still using personal credit to fund your deals, you are playing the game on hard mode. Today's guest, Ari Page, he runs one of the top business credit agencies in the entire country, Fund and Grow, and he is here today to break down how the smartest investors are unlocking $50,000 to $250,000 in business credit that they can use to pay vendors, protect assets, and cover marketing and deposits without reaching into their own bank account. This is next level strategy stuff, especially in a tight market where every investor is out there starving for cash. So you're going to hear about how to turn credit cards into cash flow machines, fund your entire business off of credit lines, and absolutely bulletproof your personal credit while scaling like a pro. Guys, welcome to the Closers Club, where real investors come to learn tactical trips and tips that are working for the most successful and serious investors nationwide. So excited to have you here today, Ari. Let's jump right into it. Let's start first. Like, how did you guys begin? How did you go from an idea to helping real estate investors access over $1.5 billion in funding? And like, how do you get 70% more or bigger lines of credit than anybody else in the industry for them?
Wow, great questions. And we've actually now surpassed 2 billion
Oh my God.
in business credit card funding. Yeah, so we're very proud of that.
Awesome.
So let's go back a number of years to how we first got into this.
Mhm.
So I was working with a gentleman called Dave Candle at the time, and we were
Okay.
doing mortgage loans. And this was in the 2006 to 2007 timeframe.
Uh-huh.
And as we approached 2008, the famous market crash,
Yes.
or the infamous market crash, what ended up happening was that the loan companies that we were working with, the banks that we were working with,
Mhm.
the loan to value amount started dropping
Right.
and dropping fast. So the loans that we were working, the clients needed to come up with more money.
Mhm.
And it turned into a real big debacle. So we figured out how to go after other forms of financing in order to make up that stopgap difference.
Oh, I love it.
And so business credit cards became the preferred tool for that.
Mhm.
So at first, the loan to values were dropping 20%, 30%, then 40%. And we were at the time we were using basically doing a by the hour, $1,500 an hour, applying for business credit cards, getting anywhere up to 500,000.
Wow.
It was a lot more. Yeah, you could get a lot more of it back then. And you could literally do at that time, you could do a cash advance that had a maximum fee of $75
Oh my God.
off of the card. Yeah, they put the money right into your business checking. And of course, it's not like that anymore. Now we have to use unique tools to do that. So when we figured out all of that, we were like, wow, this is really the gold here, is how we're able to get these high limit business credit cards. So
Mhm.
then we retooled, we created a membership
Yeah.
so that we weren't charging $1,500 per hour.
That makes sense.
A little bit expensive. And so in today's world, we have a membership where we're getting clients up to 250,000 and over of 0% business cards.
That's
And
incredible.
then we show them how they can use them to
Mhm.
fund an escrow account, to pay vendors that don't typically accept credit cards.
Mm.
And there's a right way of doing this and a wrong way of doing this. Sometimes you hear companies talking about like liquidating a credit card.
Yeah.
That's a no thing. That'll could get your card shut down.
Really? Okay. So lots of ways, if you own a business or a wholesaling business, whatever your business is, right? We all are in the same boat. We all have to buy things and fund things for our business. But for a real estate investor, there's lots of things you can do, right? You can, like, there's hard money and transactional funding and DSCR loans. And my God, it's just an infinite number of things. Where exactly does the credit cards and how you use them, how does that fit in there?
Yeah, so the credit cards are a perfect addition to the capital stack.
Okay.
We are big proponents of all the different forms of funding, but in many cases, you need earnest money, down payments. You have a 20, 30% LTV, shortfall that needs to be covered.
Right.
And it's not that clients don't even have access to the funding, but the funding might be frozen in the last deal.
Sure.
They may be, BRRRing, and they're trying to move from deal to deal. And
Right.
so the business credit card is easy to get approved for. you can then use it to fund the down payment on the next deal,
Okay.
even when you're using a mortgage or private money or hard money.
Oh, wow. So yeah, I love that. So it's just sort of this extra tool that you've got that you can use whenever you need it. But I would imagine you want to be careful. You don't want to max out all these credit cards and then you're kind of stuck in the same boat you started in.
Yeah. And so a lot of clients are using it even just for rehabbing,
Oh, really?
or
Yeah.
they're using it for the payroll, because like 60% of a rehab cost could be the payroll.
Oh, yeah. Well, yeah.
And so you can float all different types of things. We have clients that are doing 10, 15 million a year, and they're running pay per click ads. They might be doing
Right.
200, 300, 400,000 a month in
Right.
pay per click ads. And credit cards are just perfect for that as well. So really, in regardless of what they're doing, the credit cards really will help bolster their bottom line.
Right. So I would imagine you want to be tracking your cash conversion cycle from the time I spend it, whether it's my own cash or a credit card, how long till I'm going to get that money back. Cause I do have to either put the money back in my checking account or pay off these cards. So I would imagine that's pretty important to make sure you understand what you're doing there.
Yeah, absolutely. And one of the things that helps is that business credit cards don't appear on the personal credit report.
Okay.
So because of that, you're able to do what we call rounds of funding. You can,
Okay.
if you're just doing this with a personal credit card, which many people may have tried that,
Right.
and then it tanks their scores go down,
Yeah.
and then they can't qualify for new loans.
Hmm.
But when you're doing it with a business credit card, your scores stay nice and high, and then you can go for round 2, round 3, and tracking the expenses, of course, is important. One of the other things that we help the client track is the 0% period, because the cards are going to come with a 0% introductory period. It could
Right.
be as short as 6 months, and it could be as long as 24 months. So we
Really?
want to, yeah, the average ones are about 9 to 12 months.
Okay.
But the longest one that we've seen is 24 months. And we want to help track that so that the client is aware of when those 0% periods are going to run out. And a
Right.
lot of times people are like, how is it even possible to offer 0% cards? Why are the banks even doing this? This doesn't
Yeah.
make sense.
It
It's
doesn't
too
make any
good to
sense.
be true. But
Yeah.
check this out. You're gonna agree with me, David.
Okay.
This doesn't even have to do as much with the interest rate as it has to do with you swiping your card.
Hmm.
Every time you spend,
Yeah.
the merchant is paying a 2%, 3%
True.
fee. The banks are making money off of these cards hand over
From both
fist.
sides.
Yeah, without you even charging you an interest rate. And that's on top of the
Mhm.
fact that when they bring in a high-end person like you, David, they are then going to market to you other things like insurance and other
True.
banking products
They
that
do.
match a high-end business owner.
Nice. Wow. And then there's the bonus of like miles and rewards and all of that type of stuff. So are you guys able to, sort of get the right cards that kind of fit and then help me know to, geez, I'm going to do PPC. So I want to use this card and I want to use marketing or, something else. I want to use a different card. Is that how important is all that to understand and track? Cause I don't follow any of it and I probably could be getting a lot more rewards than I'm getting.
Yeah, so that's super important because there's some cards that will literally give you up to 5% cash back. Very commonly you can get 3% cash back. So
Mhm.
let's imagine that you're spending 100,000 just to make it an even number on
Sure.
your business every month, or that you have $100,000 of spending coming up, and you decide to put it onto your credit card. And there's a lot of different benefits for that, even from asset protection to the cash back. But just on 3% cash back, that's
Yeah.
$3,000 that you're going to get back. And over the life of just using the cards a couple times, you're going to pay back the entire fee for the Fund and Grow program to
Oh,
start
wow.
with.
I love
But
that.
now let's say that you have to use that you want to fund an escrow account,
Mhm.
and that the account doesn't generally accept credit cards. So you have to use one of the third-party payment services that allow that. And let's
Mhm.
just talk about them for a second, because
Okay.
there's a couple of them out there. The best one is called plastic.com.
Oh, okay.
And so plastic is actually the word plastic, but it ends with a Q.
Okay.
So some people they pronounce it plastique, but
Plastique.
I'm not French, so I just call
Sounds much fancier, right? Much more
it right,
bougie.
right. So plastic, what it does is you can actually fund an escrow account with this service. They're the only one that we know of that
Mhm.
allows for funding of an escrow account.
Okay.
And so you simply set up an account with them. You upload the different credit cards that you want in that account, and then you upload the closing statement. and then they will do a wire or an ACH or send a check. And that could cost you up to 2.9% just for that one particular transaction.
Right.
For them to transfer that money for you.
Hmm.
But remember, if you're making 3% cash back,
Yeah,
then it's a wash.
it is. That's great.
So and there's a variety of different other types of vendors that you can pay. You can pay pretty much any company as long as it's a legitimate company. If they don't accept credit card, then you simply upload the invoice from that company, and then they will send a check or an ACH or a wire if they accept it.
And I love the idea of a credit card too, because if there's ever any fraud or somebody doesn't deliver on the services, I can snatch that money back.
Exactly. So you just hit on a really big point, and that is using a credit card as a form of asset protection.
That was my question. Yeah.
So let's say, and I've been in this very scenario before where I was doing work, and so we use a contractor to put in a camera system in the Fund and Grow office.
Okay.
And it was about $100,000 for that camera system.
Jeez.
Yeah, well, it included like
what were you watching, Ari? What are you doing over there?
Well, we got a lot of data security stuff. We, have about 50 employees. There's a lot going on in the office.
Right.
So, and it also has to do with their key fobs and opening the doors, the mag locks, the way that the doors open. So it was a bunch of things that are all included in that. But anyway, this contractor did an excellent job at the install. So when it came time to doing a project at my house where I needed to, basically here in Florida, we get so much lightning that I've had my entire camera system blown out here at my house. Right. Because like the way that the camera system was connected from the guest house to the main house, it was all done on Cat5 networking cable. Okay. And when that's ran underground and you have a low level charge from lightning, boom, everything blows. So I was instructed, you need to connect all these outbuildings together using fiber optic. Okay. So I was like, well, we use this other company and they did a great job at the office.
Right.
What could go wrong? Yeah, can't go wrong with them. So I had them come to my house and do the job. It was just a $35,000 job. And they ended up completing about 2/3 of the job. And then I couldn't hear back from them. I just did not hear back from them. I was texting them. I was calling them. I was emailing them. I even sent carrier pigeons, and I could not hear back from them at all. And I was absolutely shocked. And so had I not put that job on a business credit card, I would have been totally screwed. I would have been having to go through small claims court.
Right.
But instead, I was able to use the bank as my enforcer.
Oh, I love that.
And so they just sucked that $35,000 directly out of the merchant account of that company. And they put the money back on my card. And in this case, actually, I ended up keeping the money.
Really? They never came back and finished?
They never came back and finished. But in another scenario where I had been doing work on a roof and it cost around $20,000, there was the roofing contractor contacted me immediately after the chargeback. So basically the roof didn't pass inspection. It was red tagged. They blamed it on me. They blamed it on the inspector. They blamed it on everyone except
everybody. Right.
And they didn't care about my timetable. So I initiated a chargeback, and the next day they were calling me. Like I had even submitted a Better Business Bureau dispute on them. Nothing got their attention until I did the chargeback.
Until you got in their wallet.
Yeah. So it's a wonderful form of asset protection that I recommend to any investor that's doing business with a vendor that they're unsure of. Put it on a credit card. Make sure that they're going to follow through on what they say they're going to do. And even when you're buying materials at a place like Home Depot, people don't realize your credit card comes with a lot of types of different protections for even in-person products that you're buying. In many cases, it'll warranty things that are lost, that are stolen. You have to look at the fine print on the credit card. They come with a lot of guarantees and backups. Yeah.
Do you recommend like Home Depot cards, Lowe's cards, gas cards, all of those, like the direct? Are they direct to store? Direct? I'm not sure how the right way to say that is, but the stores own credit cards.
Yeah, so those are what we call vendor credit.
Okay.
Because they're extended by that specific vendor, and you can only spend it at that company. We actually teach that under our corporate credit program.
Oh, I got you.
But these are two different types of funding that we're talking about here, because the business credit cards you can spend anywhere.
Right.
But the vendor accounts, the corporate credit cards, those can only be spent at that business.
Mhm.
And so they are helpful, they are useful, and I'm glad that you brought that up, because as you're using a business credit card,
Right.
it's going to report to your Experian and Equifax business, and it's also
Mhm.
going to report to Dun & Bradstreet and
Oh.
build you a paydex score.
Mhm.
Now, once your company has good revenues that can be proven on a tax return, you can
Uh-huh.
get all kinds of wonderful things. Like, for example, I bought the Fund and Grow building using a corporate mortgage
Oh,
that I
nice.
personally didn't have to sign for.
That's
It's
cool.
it's non-personally guaranteed.
Mhm.
I bought another strip mall building that had 3 units. I guess it's not really a mall, but it's, 3-unit
Yeah.
commercial building that has 3 different businesses in it. And I bought that building completely using this corporate credit. Now, I didn't
Mhm.
qualify for that at first.
Uh-huh.
I first had to use business credit cards to build up my Dun & Bradstreet Paydex rating.
Yeah.
Then as my business was making real revenue and income, I was then able to get those types of mortgages. And I think that those are the ultimate ones that real estate investors want to go after,
Right.
because they're completely non-PG.
Right. So for somebody who's just getting started out, and we definitely recommend you guys, and think that everybody should go over there and get their business credit lined up. Where should they be kind of in the process, before they call you? Should they just call you and book a session right now? Like, tell us a little bit how the process works.
So if you have a 680 credit score or higher,
Okay.
then we're going to be able to help you.
Got it.
So if someone has bad credit, then unfortunately we would refer them to our credit repair company. Now, you might wonder, well, why are you talking about personal credit if these are business credit cards?
Right. Right.
But that's the whole point of the business credit card versus the corporate credit that we were just talking about. Corporate
Mhm.
credit is completely non-PG, but on a business card, they need to look at your personal credit first. They have
Makes sense.
no way of determining your credit worthiness without looking at your personal credit. But then after getting access to a business credit card, it reports. It doesn't report to your personal credit. It reports to Dun & Bradstreet. It reports to Equifax Business and Experian Business, giving you a
Mhm.
credit exposure on those credit bureaus. So
Got
that
it.
way you actually start building a business credit profile. And then
Nice.
from there, you're able to get approved for the corporate accounts that we were just talking about.
Love it. Love it. So 680 credit score. They're going to go to fundandgrow.com/easy REI closings. And then, like, what happens once they do that? They're going to fill out some forms. They're going to be able to talk to a live person. What's the next step?
So the best way is to go through our pre-qualification form.
Okay.
So, and we can put that up on the screen. And the
Yep.
pre-qualification form is essentially a instant process. It's an instant snapshot of what's going on your credit, and it'll tell you exactly how much business credit you qualify for in the next 14 days,
Mm-hmm.
as well as how much you can get over the life of 3 rounds of funding.
That's so important. But just going back again and again and again, and make sure you just squeeze all the juice out of the lemon that you can.
Yeah, exactly. So then once the client is part of the program, that's when we're going to give them these additional tools, like, for example, how to fund an escrow account, how to pay a vendor that doesn't accept credit, and
Mm,
also the utilization of these cards. It's
yeah.
very important that you're utilizing them properly. Otherwise, when it comes time to do rounds 2 and 3, we're not going to be able to squeeze as much juice out. We're not going to be able to get as much additional credit. And so with our process, we do all of the applications for the client. We identify the best cards based on
Mm,
their credit profile, based on the existing relationships that they
wow.
already have. Then we do the applications,
Hmm.
but the client has to approve each application. We're never applying for something that has
Oh,
an annual
good.
credit fee, or I'm sorry, an annual cost. Like, you know how some credit cards have like an annual fee? We don't
Hmm.
apply for any of those. There's no application fees. There's no extra or additional fees.
Hmm.
And the client actually gets to review each account that we're going to apply for and then approve or reject it.
Okay.
That's really important. So that way we're completely on the same page.
Nice.
Then we have this easy process where we step the client through, and this is for compliance reasons. We
Mhm.
step the client through how to communicate with the underwriter on a phone call. So they speak to the underwriter for a few minutes, and this is where we're able to really maximize the amount of funding coming in.
Oh, wonderful.
This is how we get 70% higher limits, is by working with the client through our consulting process to do this follow-up process. And you know, without that follow-up, you're only going to get about a third of the funding that you could get access to otherwise.
Love it. All right. Thank you so much, man. This was incredible. Guys, if you are looking for business funding, go over. It's fundandgrow.com/easy REI closings and book a call, get with them, go through the, the process there. Take a look at what is available. I have a good friend of mine, one of your best clients, Nick. He absolutely has crushed it and has taken this to a whole nother level. And I know he travels all over the world on these points. So it is definitely something that you should look for, especially, as we go into 2026 and you're looking to, really ramp up your business. You have to have money to do that. You cannot just do it on a hope and a prayer. So, all right. Again, as always, thank you so much for popping on.
Thank you for having me, David.
All right. Talk to you soon.